Good evening, this is Duane Lowry for the DPP Grain Desk on Sunday, September 23rd. It's about 4:06 in the afternoon. Comments this week and the outlook this week and the inputs this week, probably not significantly different than last week, but I think that we need to talk about where we're headed on a bigger picture scale, how far into this liquidation process we are, and I think that's the key. First of all, I think it's interesting to point out that beans have broken $1.80 from their late summer highs. Corn has broken $1.10 from its price peak. The break has been about a month in duration for corn, maybe certainly a longer period in time if you include some sideways stagnation type of price action, but the decline in itself has been about a month old in corn, but it's only been about a week in beans. So you've broken a significant amount of that $1.80 in beans during the last week, and you've broken a significant amount of the $1.10 in corn, taking about a month to do so. Late last week, if you follow the daily comments on the DPP Grain Desk, I talked about bears wanting to be careful, be cautious. We were entering the longer-term downside levels. Last Monday, markets were down hard. In the case of beans, that weakness continued until the week's low was made on Friday. The market was certainly on a fast track last week in terms of generating liquidation activity and putting longs under pressure and pressuring chart patterns and breakdowns and things of this nature. And so we did accomplish a lot of liquidation activity last week. The marketplace has shifted from a near universal sentiment, believing the market could never break, to a recognition that we have broken a significant amount, far more than anybody expected, and that now we're dealing with a situation where traders are somewhat more respectful of additional downside risk. But I think, late last week we saw short-term technical conditions begin to consolidate, begin to offer some hope that maybe we're nearing the end of this particular break. Some of the longer-term downside price targets were achieved last week, and it was certainly not unreasonable to begin to look at where might this bottom occur, where might this liquidation end, and how close could we be to a seasonal bottom. No matter who you talk to, I think there's a general belief that the rationing job that is required, regardless of what the final national yield figures are, is quite significant, especially in the case of corn. In the case of soybeans, for the longer term outlook, I think people want to be bullish, but I think they're more bullish on ideas that there will be some sort of a production scare in South America as opposed to bullish just from raw global supply scenarios. In the case of corn, I think they're bullish because of U.S. supplies, a very enormous job of demand rationing that has to occur, and it's going to be a backdrop for the entire marketing season. And so consequently, when you look at all this, I think even though the yield reports have been more varied, and there's certainly it's reasonable to believe that the market has already digested the worst case scenarios, and if anything, we might see national yield ideas gravitate up from where they were just before we started harvest. Despite all that, it's still a monumental task in terms of demand rationing for corn. So regardless of where you believe the final national yield is going to be, everybody seems to be looking for that seasonal bottom, trying to figure out where this break is going to end, believing there's going to be upside opportunities during the winter. And I think that's a reasonable assessment. I have no problems with that, and I probably would share the same general idea. The problem here is, have we done enough? Have we accomplished enough of this liquidation? Can we say that this process is mature? Late last week, I saw signs that short-term technical indicators that would suggest we could stabilize. We certainly had achieved some and entered into some longer-term support and downside target objectives. But the problem is, you could still have, from Friday's close, you could still have another 50 to 75 cents down in beans, and you'd still be into long-term support. You could have another, 25 to 35 cents or down in corn and still be at long-term support levels. And I think that we still have to respect downside risk. We still have to be concerned about the fact that this break, as dramatic as it's been, is only about a week old in the beans. I'm not sure a week is enough time to accomplish the type of liquidation activities that are usually ultimately achieved after we experience such lofty gains during the summer and reach such attitudes where the market thought it could never go down, and if they did think there was downside risk, they thought it was far minimal and far less than what it actually proved to be. And that type of situation usually doesn't allow just a 1 week time period to for a liquidation process to reach maturity. So while late last week there were reasons to have some optimism that we could stabilize, there was reasons to believe we could get some corrective bounce, and we did see that type of action in the corn. We saw the market stabilize after Monday in corn. We saw the market attempt a couple of recovery attempts, but at the end of the week, you're still settled only about 9 cents above, the low of this particular move. And in the case of the soybeans, we had a nice reversal up action on Friday, but the week's low was made on Friday, and there's going to be resistance, 15 to 20 cents above Friday's close in beans if we were to get some additional strength early this week. So we still have issues to work through, and I think that while we all want to try to find this bottom, I'm afraid we have more time to spend in this scenario. So users need to be on guard. They need to be looking for opportunities to get upward price protection. Producers are not going to have any storage space issues in most locations. Most everybody would believe and agree that there's going to be value in owning the physical commodity, especially in the case of corn, maybe not so much in the case of beans, but certainly in the case of corn. And so I think that while some producer sales may have been a little bit aggressive here in the very early part of harvest, I think as prices stay at these levels or maybe work a little bit lower, I think the selling interest can quickly dry up, cash markets can firm, and so we're going to get a bottom established here, but we may need more time for this to happen. We may see more liquidation pressures unfold. So as far as this week and tonight is concerned, I wouldn't be surprised we trade on both sides. I wouldn't be surprised if there's enough encouragement in the trade with Friday's reversal up in beans and enough hopes that we're expecting some sort of a bottom. It wouldn't surprise me to see some buying interest surface and see some early week strength. The problem is, if this liquidation process is not fully mature, and I'm afraid it's not, you're still going to have selling interest build above the market, and that probably means we still have more downside risk, and it probably means we still have a few more weeks, couple more weeks, 3 more weeks, I'm not sure which, before we can get the bottom in. Maybe this bottom doesn't occur until we get the October crop report out. Maybe that October crop report shows, a stabilization or a recovery or some sort of uptick in yields, and maybe that puts the bottom in. I'm not sure, but it doesn't feel like we're quite there yet. So I guess I'd be concerned that we still have more time to spend in this liquidation phase. For the DPP Grain Desk, this has been Duane Lowry. Thank you.